boys, gentlemen, welcome back to the channel, baby. Guys, if you aren't familiar already, we have day 2 of the boot camp. Guys, in today's video, we are going to be covering market structure and price action on a very basic level. Okay, we're going to get more into depth as the days goes on and as the boot camp goes on throughout the week. But for today, we're covering market structure and really just the basics of it all. Now, if you didn't watch day 1, definitely go back, watch day 1 so you understand what trading is, things along those lines. For the most part, that's what we're covering in today's video, so let's get straight into it. So guys, if you aren't familiar already, what is the only 3 things that the market can do, right? The first thing the market can do is it can either go up, meaning like up, right, just to the upside. It can either go down to the downside, or it can consolidate. Now, what does consolidate mean? Consolidate means it can just go side to side, right? Because price is always moving, but there's really only 3 things that is happening when price is moving. It's either going up, it's going down, or it's going side to side. And so if we start over here with market going side on an uptrend, meaning going to the top side, this is how the market moves to the top side. It starts off with over here, right? So essentially this top point, you call it a higher high, since that's what it is, right? Price is moving, it's a higher high. And then market will pull back and create a higher low. And then once it's pulled back, it will then go to back to the upside and create a higher high, right? Because it's higher than the previous high. Then it will pull back and create a higher low, because it's higher than the previous low, and so forth and so on. And that's how the market moves to the top side, and just really market moving in general. Because guys, if you couldn't tell already, like the market can't just like move like to the go up forever and ever and ever and ever, right? Price doesn't move that way. Things wouldn't flow, like really work at all, if all price did was just essentially like do this, go from top to bottom, and not really have any kinds of structure and things along those lines, right? And mind you guys, I'm going to dive into all of this on the actual candlesticks later on in the video, but for now I just want to give you guys like the basics understanding of this sort of stuff. Okay, so also known as an uptrend is bullish, or like a bull market. That's why if you hear people say like life be bullish or whatever, things along those lines, it's because this means things are going up, right? Now, the other thing we're going to cover the downtrend first before we get into the consolidation, is a downtrend, right? And essentially downtrend is the same exact thing as an uptrend. It's just the opposite way. And so you can see here we have a lower low and then a lower high. And then once we have that, we have a lower low again, because price is making a lower low. Then we pulled back, have a lower high, right? Lower high from this point, and then so forth and so on. And that is known as a downtrend, otherwise bearish. Okay, we've got a bearish market, or things along those. It also just means things are going to the downside. Okay, so now that you guys understand a bull market and a bear market, uptrend and a downtrend, let's go over what a consolidation is, what a sideways market is, right? So it's pretty basic, pretty simple to understand. Guys, this just means price is moving, but it's not really going anywhere. You guys can see I have this box line out as it's just ranging. It's just going side to side. Yes, it's going up and down, but there's no clear structure here on this actually having some kind of move to the upside or move to the downside. It's literally just staying in the same place, but price is moving, okay? So now with consolidations, there are also things known as a distribution and an accumulation. Now, what is the difference between those two? Guys, if you ever hear somebody, or let's just go over what it is, okay? So basically, guys, a distribution is price breaking to the downside. Like, it basically just price breaking down. And you can see here, again, also like consolidation, right, is price is moving, but it's not really clear. A distribution is that process playing out, but to the downside, as you can see here after I marked it out, right? Like price moving, and then boom, it's like the breaking down of it all to the downside. That's what a distribution is. Again, it's distributing to the downside. Now, on the flip side, what's the opposite? Price pretty much accumulating and accumulating its way to the upside, right? And so you can see here, ranging, the price is pretty much consolidating, doing its thing, and then going to the upside. That's what you have as an accumulation, okay? So that pretty much outlines, boys, like basic structure on a very, very basic level. You have your uptrend, you have your downtrend, you have your consolidations. With consolidations, a lot of the times it's either doing one of two things. It's either consolidating to then take market to lows, or it's accumulating to then take market to highs, right? That's pretty much structure on a really basic level, okay? So now that we understand structure, I want to go over, and the next thing we need to go over is the key zones within structure. And that is the understanding concept of supply and demand. Okay, now what is supply and demand? Guys, supply and demand are just areas in price where things have reacted strongly. Okay, so again, these terms, a lot of the times you'll see supply and demand, they're the same exact thing. It's just the opposites of each other, right? So demand being the area where price shoots up from, so where buyers are stepping into the market. I have it pretty much outlined and drawn out here for you guys. So as you guys can see, we have a down candle, a red candle, then we have a green candle to the upside, then we have a down candle, a red candle, and then all of a sudden we have this huge push to the upside, right? And so what is that, right? That's an area where price reacted strongly. And so the zone we mark out is that last candle before all of the expansion candles, or pretty much just the last candle before we saw the the crazy reaction in price. So you can see here, I pretty much take my zone and I mark it out. I'll take my square, right, and mark up this last down candle before that huge reaction right there. Like, it's a really simple way, okay, of breaking it down for you guys. Now, guys, that is what demand is, like a demand area. It's an area where price reacted strongly going to the top side. Okay, now what is the opposite of demand? As I was saying, that is, oh, sorry, let me pull this over. That is a supply area, okay, where price now shoots down, where sellers are taking over the market, okay, where sellers are stepping in. And again, the same exact thing, where you can see we have an up candle, down candle, up candle, and then all of a sudden we have this huge series of down candles, right? Again, I'm going to show you guys this on a live chart, but just want to give you guys the understanding first. And so what is that? That's some kind of strong reaction. And so then what are we going to mark out? We are going to mark out that last opposite candle before the reaction, before the strong reaction, right? And so in this case, you can see it's the last up candle before the series of down candles. Okay, that's in this most simplest way what supply and demand is. Okay, pretty much just the areas in the market where price is reacting strongly and where either the buyers are stepping in or the sellers are stepping in. Okay, so now price action on its basics, guys, if we really just go over this is like one of the core concepts in what I was taught a long time ago, is right here. Okay, so for the most part, as I was saying, this is an institutional way of looking at the market, right? Now, if you guys are familiar, there's also a retail way of looking at the market, and that's where people will use trend lines, support and resistance, if you guys have heard of that already. Now, what is support and resistance? Support and resistance means essentially if price is bouncing off of a level, if it's on the bottom, think of your feet, you standing in a house, and the floor being your support, that's kind of where price is bouncing off of, because you can't go through the floor, right? That's what support is in a retail way of trading. And then a resistance being the top here, you can see price bouncing off the top, it can't go past. That's the way of thinking of as a roof in your house. So if you're standing in that room, the floor being your support that price can't get through, and then the resistance being the ceiling that price can't get through. And so you can see here, oh, my bad. So you guys can see here, that's pretty much just like price bouncing in between, right? And then what happens is once price does successfully like break through that level, whether it's a support or a resistance, now that new also known level as like the support, like where you're standing, all of a sudden turns from a support to a resistance. Because like let's just put it this way, price would basically, right, break through, so it's no longer support because you fell into like the basement of the house, and then the new ceiling would be like that previous floor that you broke through. So price broke through the support, and then all of a sudden, that basically, put it this way, that's oh, looks like I have two of them drawn there. Just basically that support turns into the new ceiling, and then what do you see? Price can't obviously go through that ceiling, so then it goes down, right? It's like a retail way of thinking in trading. And so with institutional, they know this. This is again the institutional way of trading, like the banking way, like essentially the banks moving the market, an institution, and so they know that this is how retail and how like everybody else or like the rest of the world trades, as what they like to say, and so they will fake and manipulate the market in their favor to take all these people's money and have them get stopped out of the market, um, to then move price in their direction, right? And so what do we have here? Like the basic price action of institutions, and the way they move, and this is how they move, right? So you can see here, you got the price bouncing back and forth on the resistance and the support that we don't necessarily use, right? And so then what we see is price breaks through that support area. And so now everybody in the market thinks like, oh, we broke to the downside. What does this mean? This means that price is going down. So what is everybody going to do? They're going to take shorts right here and then, have this wherever their TPs are, and sell. Now, once that has happened, what do the banks do then? They move the market to the upside, right? And so they all get stopped out. They all lose their trades here, lose money. And then they're like, oh, we broke this resistance. This resistance is going to turn into a support, right? So they broke through that ceiling. Now that ceiling is going to turn into a floor. And so now they're like, oh, great, bro, great. Now we can take a long here, and then obviously have their stop losses wherever it is. Their stop loss under the support. And then boom, what happens? They get stopped out when price comes back down and takes them out, right? And so you guys can see it's literally just like the manipulation of the market, like basic price action here. And so what we call this, guys, is pretty much like it's not necessarily like a liquidity sweep. I'll get into that as the days go on, but for the most part, it's a sweep or a spring. Once you have the spring, right, it shoots price to the upside. It breaks structure to the upside because it broke these previous highs that we had right here, confirming our structure being, or pretty much just like, yeah, market structure being shifted, right? And then what would this look like in what I just told you guys, right? Where essentially, like in the actual market, like we would have, let's just make this like red, right? Think of that as a candlestick. And then let's just say we have, boom, green, 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 right? And then let's just say we have, oh, not that. Oh, oh my days, bruh. I'm trying to drag it over. Oh my day. Alright, bro. That's good. So then, what do we have, right? After that, we pretty much then have the market coming back into that area. But let me just, put this out for you guys. Boom. I apologize. I apologize, gentlemen. Bear with me. So, as you guys can see, right, as I was drawing out earlier and kind of telling you guys about the supply and demand areas, pretty much this, where would our demand zone be, like our area? It would be where price had like a strong reaction, right? And so where did price have a strong reaction? Right here, this last down candle before this huge push to the upside, breaking structure, right? And so then what do? We mark out that area as I did here with the with the blue box, right? And then we wait for market to come back into this area, and then what would our entry look like, right? Entry pretty much look like this. Stops below this. We won't get into like all of that for now. And then pretty much our target wherever, and then you're going to see market push to the upside, right? And so what is happening on like an institutional level, right, is they're pretty much taking, like, they come into the market here with their orders, right? And things along those lines. They're taking out everybody's money. Then they come back in this area to fill more orders from here, again, and still taking people's money along the way and things along those lines. And then once they come back into this area to fill those orders and things along those lines, what is that going to do? Then essentially all the buyers and all the money again is coming into the market, and that's what's going to take it to new highs and to the upside. And then again, as I was just explaining, right? With this way of thinking, with price action, not only do you have this going to the top, but you have the same exact thing going to the bottom, right? So you'll see price, boom, 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 resistance, floor, ceiling, can't break through. Oh, breaks through. People think it's going up. They're going to take buy positions. Boom, they get stopped out here, right? Then, oh, price broke this. It's going to go down. They boom, comes back, gets stopped out again. Then it comes actually to their entry and then takes the market to the lows. You can see same exact thing that I just explained here. It's just the opposite is happening, okay? Now, boys, I know that was a lot, but for the most part, all I want you guys to understand is no matter what kind of strategy and things along those lines that you adapt into your trading, you just have to know, bro, that structure is one of the best things to always have before your strategy. What do I mean by that? Guys, if you haven't by now heard of this thing that goes along the lines of the trend is your friend, or like ride a wave, if the market is going towards a high or going towards a low, meaning like it's an uptrend or a downtrend, why would you go against that, right? Why would you go against a wave? Why would you not just surf with the wave? And so I just want you guys to keep this in mind with moving forward and how we're going to break things down. That always keep in mind that structure is like the fundamental, no, sorry, not the fundamental, is like the basics, is like the basics of everything. Remember, the basics are by far like the most important things, okay? Now, with that being said, we can actually just stay here and go into the market. Let's analyze this on the actual charts, boys. So for the most part, we can literally just kind of go into here. Boys, what does this look like? Okay, so first of all, before anything, just getting into the chart, you guys can see at the top here that I am on the 4-hour time frame, right? And so what that means is every single one of these candles represents 4 hours. Now, if I go on to the daily, what happens now is every single one of these candles represents a day worth of data. Again, 4 hours worth of data, 1 hour worth of data. Each one of these sticks is whatever time frame you're on. And so if we're on the 1 hour, every single one of these represents 1 hour. Now, what you'll notice on top of all of this is these kind of like things, right? You see these wicks is what they're called. And now, what does this mean? Guys, all these things mean at the top and the bottom of these candles is within this time, meaning because we're on the 4 hours, so within this 4-hour period, price pretty much moved in between the top of this and the bottom of this entire candlestick. Now, where the actual closure and open of that candle is what those wicks are. So pretty much if price opened wherever, right, and then was coming up, coming down within that 4-hour period, but then the 4-hour period was coming to an end, and so it closed over here, but maybe before it closed, it came down a little and then retraced a little close. That's what a closure means, is just when that 4 hour candle opened and closed. That's pretty much what the actual filled candle itself represents. The wicks just mean, what happened during that 4 hour, like if there was any movement during those 4 hours, but it didn't necessarily close, even though price came all the way up to here. Okay, so that's what those wicks mean. Now, with that being said, right, if we just kind of analyze price, let's go somewhere it's a little more clean, or actually we can just stay here. If I grab this right here and just kind of draw basic structure for you boys, right, what can we identify that price is, or like what kind of a trend is the market in right now, right? If we just look at that right there, let me just pull this away from it. What does that look like? It looks like the market is going to the downside, right? A downtrend. So that's the basics of that, right? Now, same exact thing. Like if we just kind of go into here, if we go, okay, we got market here, market here, market here, market here. What does that identify as? Oh, would you look at that? What does this look like the market is doing? Oh, my bad, boys. The market is going to the upside, right? And so that's how you like pretty much just look at these charts and identify a trend. It's pretty simple to identify a trend. You just kind of got to look and pay attention to what's going on, right? So with that being said, now if we wanted to mark out our zones, right? So if we wanted to actually like see, okay, you know what, this is going to the downside. How can I actually trade this? What did we go over, right? We went over marking out our zones. And so the way you're going to be able to mark out your zones is exactly as I said earlier. Where do we see here in any of these areas like a pretty strong, reaction to price? Off the top of my head, I can see like two, okay? So the first place is right here, right? You got this last up candle, that's white. Let me just make this like blue. You got this last white candle before the series of black candles, right? Which is, so we got the last up candle before the down candles. So this is essentially like a zone, okay? Where I am like an area. This is like a supply zone again, because we're going to the downside, right? The other area I would kind of look at is this area right here. You guys can see we have this last up candle before this boom, down candle, boom, huge down candle that ends up taking out these lows, right? And so on a basic level, as I was explaining earlier with like the, support resistance and things along those lines, what would an entry look like here? Boom, have the entry be right here at this zone, or maybe right here. There's an imbalance and things, but we don't got to talk about that right now. And then I just have our stops be at the high right there. And then where would we target? The low right there, right? Simple trade. Obviously, I would never trade like this. This is way too much of a, like just terrible risk to reward, so 1-to-1. But now that you guys understand that, right, and marking out our zones, what I do is something called top-down analysis with the way I trade. Top-down analysis, boys, just means you're starting at the top and you're making your way down with your analysis. So, like, for example, you see how I marked out this 4-hour zone? So now what I'll do is, now that I have that zone and I'm really paying attention to it, I'm going to do exactly what I just did and identify structure and all these things on a lower time frame, right? And so where are we at over here? We're over here. And so now that we have this pretty much 4-hour point of interest or supply zone, I'm going to wait for price to come in there. So it obviously comes in there. And then what am I going to look for when price comes into there, right? I'm going to look for a shift in structure. So boom, boom, and then what do we see? We see a break, we see a test, and then we see the continuation to the downside, right? And so just like on a really basic level, again, what would this look like? This would look like going from a 1-to-1 to like a 1-to-3, right? Like if we were just to do this like on a very, very, very basic level of you getting to understand like entries and top-down analysis. And so again, we can do this on every single time frame. Boys, what you have to understand is that the market, I believe the word is fractal, okay? What does that mean? That means that there's patterns inside of patterns inside of patterns inside of patterns. So everything that we see on the monthly, on the weekly, on the daily, we're also going to be able to see on the second time frame, on the 5 second time frame. Like the market and the time frames and the patterns are in themselves. And so all we're really doing is identifying these patterns on the higher time frame and then going to the lower time frames to continuously um, basically identify them, find better entries and better zones and more specific zones. That why? Because then we can have, more specific entries, for example, make more money, and be more just precise with what we're doing. And so that's why it's really important for you to understand that the market is fractal. Okay. So with that being said, like if we just go back to understanding, sorry boys, if we just go back to understanding, basic structure, right? Like let's just say this was on the daily, right? So now what are we gonna see now that this is on the daily? What we're gonna see is that if we were to go on like the 12 hour or the 4 hour, we're gonna see that look like this, right? Have its own structure. Sorry, that looks sloppy, guys, but you get the point. That now we're gonna have structure inside of structure, right? And then again, if we wanted to go even lower inside of this structure, like going to the top, what are we gonna see? Even more structure. Okay, it's kind of glitching right now because we're too zoomed in, but you get the point. It's just fractal, and this goes for the same again with the uptrend and the downtrend. So boys, hopefully I didn't explode your brain. Hopefully that made sense to you guys in just understanding basic market structure, simple supply and demand zones. And yeah, boys, we don't want to get too overcomplicated. Maybe we already did, but that's totally fine because as the days go on, we're going to get more specific and really dive deep into the topic. So, gentlemen, hopefully you guys took something valuable from this video as always, and I will see you guys tomorrow in day 3.